Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And welcome back, everybody. I hope you had a great holiday weekend. So we're back at it, back trading. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And I'm also on X, formerly known as Twitter. My name there is @Pless. And Bookmap is asking that everyone, for a better streaming experience, join us on Bookmap Discord, and you also need to verify your subscription. Note that you can sign up for a free subscription if you're not already a Bookmap subscriber. So again, you can sign up for the free digital version. You'll need to verify that. Then you can watch all the streams in Bookmap Discord as well as participate in chat. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the SP 500 and the NASDAQ 100. And for the SP 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the SP 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is positional analysis, or first is planning, and I use positional analysis. I look at how traders and market makers are positioned at the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap, in real-time market maker hedging flow on Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset, and setups in the NASDAQ can be taken with futures contracts, shares of stock, or options, depending on the asset itself and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat in YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector, Stephen, welcome, glad you're here. Here's my agenda for today, Wednesday, September 4th. First of all, I want to go over news items, economic data, and events for the week. Then I'll go through my positional analysis for today. Then I'll review some setups earlier today, and then I'll get to the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with news items, economic data, and events. Let's take a quick look at the economic calendar for the week. Yesterday, there was a, this is the homepage for Spotgamma dashboard homepage. Just take a look. This is the remaining part of the week. And yesterday, there was an ISM manufacturing PMI data, came out at 10 a.m., lower than expected, lower than the previous. And today, the JOLTS job openings data came out. And let me check on that real quick. And the JOLTS job openings was lower than expected and lower than the previous number. All right, so that, and there was a reaction of the market today. We'll take a look at that in just a minute. All right, so tomorrow, ISM PMI data comes out. That's at 10 a.m. Eastern Time. And there's also S&P PMI data that comes out at 9:45. Usually the market pays a lot more attention to the ISM data than the S&P data. And then finally, the big data report for the week is the jobs report at 8:30 a.m. Eastern Time, Friday morning. All right, so that is the data for the week. All right, let's move on now to positional analysis. I'm going to start with the S&P 500. So this is the ES Futures and Bookmap. And before taking a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to the underlying index. This is SPX. This is a one-day chart for the past year. And we've all seen this chart before. I'll go through this quickly. So this year, last year, our big rally began 1,100 points in SPX. This year, correction began April 1st. Rally resumed the Monday after the April put-dominated options expiration. And the rally continued up to the July 17th VIX expiration. Led to another correction. And let's pick that up now with a 1-hour chart. Sticking with SPX, the underlying index, going to a 1-hour chart. This is the low at 51.19 after that 717 VIX expiration correction. And that sharp drop was due to weak data as well as the yen carry trade unwind that happened over the weekend. Market bounced, pulled back, tested the 5,200 put wall, and then that market rallied up to a consolidation between around 55.60 and 56.50. And yesterday, the SPX broke down below that consolidation. More about that in a few minutes. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines. That one may be hard to see. The upper week daily expected move is right on top of the lower weekly expected move. So that is the lower weekly expected move. That's the upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. And note, yesterday, SPX did move down below the lower weekly expected move and still trading below that level. All right, the dashed blue lines are showing the lower and upper daily expected move. So the weekly expected move, again, based on the options market, based on the closing price for SPX from last Friday, those levels remain in place for the entire week. Then the daily expected moves, those are based on the closing price for SPX from yesterday. I update those levels every day, post them in Discord. All right, so today SPX is trading within the range of the lower and upper daily expected move. All right, the dark red lines of this chart are showing Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim, 30-day, 1-hour chart. I'm going to point out the key daily levels. First of all, 5,500. Right here, that is the put wall. That's a strike with the largest net negative gamma that can be expected to act as support. That's also the absolute gamma strike. And the absolute gamma strike is the strike with the largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. Spotgamma is looking at 5,500 to be a solid level of support. And above that is the volatility trigger that's shown right there with VT. That is at 5560. So that is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative, like it is today. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility, and that was key to movement yesterday. I'll talk more about that in a few minutes. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. Note again, SPX trading below that level, below the volatility trigger, in a firmly negative gamma environment. And note the volatility trigger did shift up from yesterday. And then finally, the call wall remains at 5750. That's a strike with the largest net positive gamma that can be expected to act as resistance. All right, shifts and levels for SPX. Like I said, the volatility trigger shifted higher and the absolute gamma strike shifted lower. And for SPY, the volatility trigger and absolute gamma strike both shifted lower. All right, so those are the key gamma levels. And let's wrap up our view of SPX with a 1-minute chart. All right, so I'm showing several days worth of data. Here's that breakdown yesterday. Breakout of the consolidation range yesterday. Note yesterday the volatility trigger was at 5620. This was a key to the movement yesterday. We'll take a look at the Vanna model in just a minute. So actually before the cash open, SPX, the ES actually chested the 5620 level. Let's just take a quick look at the Bookmap chart from yesterday. So here was the key to yesterday. There's the 5620 volatility trigger. And I was working on trying to get this marked up and posted. I just ran out of time yesterday. So this was about 9:15 a.m., a few minutes before the cash open. SPX, the move down yesterday in ES started overnight, I guess around the European Open. ES moved lower, came back up, tested the 56 volatility trigger, and continued to move lower all the way down almost to the 5,500 put wall. In a negative gamma environment, so supported by the Vanna model as well as a sharp increase in VIX. More about that in a few minutes. All right, so that's yesterday, key to yesterday, watching that volatility trigger. All right, so today, Let's just zoom in on this now. Last couple of days, yesterday, again, tested the volatility trigger at 56.20, move lower, almost to the put wall. And now today, SPX continues to trade below the volatility trigger. And there are a couple of spot gamma levels in play for today, the 0 gamma level and this large gamma 2 level. All right, so yesterday, SPX started out in a positive gamma environment, traded below the volatility trigger, and shifted to very negative gamma today, and now a little bit of consolidation after that large move yesterday. So again, SPX above the put wall, below the volatility trigger, also below the lower weekly expected move. All right, so those are the levels in play. Let's move on to Bookmap now. So again, this is ES Futures and Bookmap. And I look at the S&P 500 in terms of SPX and SPY levels. So I have those levels on my Bookmap chart in my old cloud notes. Here is the 5550 large gamma 2 level acting as resistance today. Earlier today, the SPY 550 absolute gamma strike acted as support. So the range after the cash open is pretty much the SPY 550 absolute gamma strike to the SPX 5550 large gamma 2 level. And right now, the S&P 500 trading in the middle of that range. We'll talk more about setups in a few minutes. All right, so those levels in play. Note there is a difference in price between ES and SPX. And today it looks like it is somewhere between 11 and 12. I'm using 12. Actually, I may be using 13. Let me check that just a minute. Let me refresh my price lines. Okay. All right, so I changed the levels in my spreadsheet, but I never refreshed Bookmap here. So the price difference between ES and SPX today is about 12, and that's what I'm using. So I'm showing the 55 level, 5550 level at ES 5562. And though those levels do change every day, and as the contract rollover quickly approaches, the ES to SPX difference will approach 0, and the ES to SPY ratio will approach 10. And I do post those levels that I'm using every day in Discord. All right, more about setups in a few minutes. Let's take a look at the NASDAQ now. All right, this is the NQ Futures and Bookmap. Let's take a quick look at the underlying index charts. I'm going to go to QQQ first. This is a 1-minute chart, QQQ, showing the levels in play. Key level here is 460. That's the put wall, as well as the absolute gamma strike. All right, so just like SPX, put wall and absolute gamma strike now at the same level for QQQ. So for QQQ, volatility trigger shifted lower, at 470, so QQQ well below its volatility trigger. Put wall shifted higher, absolute gamma strike shifted lower. All right, so for QQQ, round numbers in play for today. 458 support, 464 resistance. So again, QQQ trading above its put wall and below its volatility trigger. And let's take a look at NDX. Looks like around the 0 gamma level, acting as resistance. And NDX also trading above its put wall. All right, back to Bookmap. So again, I have my own cloud notes in Bookmap, so I can show QQQ levels as well as NDX levels. QQQ primarily round number levels in play for today. The put wall would be an absolute gamma strike at 460, somewhere in that cluster of levels. 458 support, 464 resistance, and that's right at the same level as that NDX 0 gamma level. All right, so again, I'll talk about setups in a few minutes. All right, let's wrap up our view, our positional analysis by taking a look at gamma notional. This is very important today. What I'm going to take a look at is gamma notional. This is market maker's position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. That's what I look at. Note all these numbers are negative and very negative. In the billions for SPX, SPY, and QQQ. And this is a very sharp shift lower from yesterday. Yesterday, gamma notional was positive. This was based on closing prices for Friday. Gamma notional was positive yesterday at the beginning of the day, again based on closing prices for SPX, SPY, NDX, QQQ on Friday, and then a very steep, sharp shift lower in gamma notional today to very negative, again in the billions. So for SPY, that is over 2 billion negative gamma notional at the beginning of the day. So in a negative gamma environment, this indicates traders are long puts, market makers are short puts, hence the negative gamma. They have to trade with price to hedge their delta exposure. One other thing, this is the number that Brent at Spotgamma, founder of Spotgamma, looks at, this SG Gamma Index. Theoretical range from -4 to +4. So you can see this is almost at the lower end of the theoretical range of the most negative gamma possible. And actually in this very low end of this range, often the volatility can decrease at this extreme range. And that may be what's happening today. All right, let's take a look at the Vanna model now to get a better sense of what this means. I'm going to take a look at the Vanna model for SPX. And note I'm looking at yesterday. So yesterday, let's go to yesterday first. So yesterday, remember the high of the day was right around 56.20. Oh, let me see. Here it is. Sorry. Somewhere right around here. So this was the low for the day. All right. So before I guess I need to explain what this chart is showing. So what this chart is showing is market maker's delta notional on the vertical axis. Spot price for SPX on the horizontal axis. There are two curves on this chart. The first curve shows how market makers delta notional. The white curve, or light gray curve, shows how market makers delta notional may change with changes in price only. And the purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. That's the curve that we want to take a look at. And that change in delta with a change in implied volatility is the Vanna model. All right, so back to where I was before. Price for yesterday, high of the day, somewhere right around here. Low of the day, just above 5,500, right around here. So as price dropped, we'll take a look at a chart for VIX in just a minute. Price dropped, implied volatility increases, market makers delta notional increases, and they have to sell futures to hedge their delta exposure. So the beginning of the day, remember, S&P 500, before the cash open, broke below the 5620 volatility trigger. The S&P 500, SPX traded in a negative gamma environment all day. VIX increased, price dropped, market makers had to sell futures, and that helped to fuel that move lower. All right, so that was yesterday. Let's take a quick look at VIX. Dark shaded portion, regular trading hours. Yesterday, sharp increase in VIX from around 16 up to a high of 23. Dropped this morning, and now it looks like VIX is coming back up. All right, so that's yesterday. Let's take a look at today. And so far for today, SPX, low of the day, just above the put wall at 5506. Right here. So has price increased earlier today. Implied volatility dropped. We saw that on the VIX chart. Market makers delta notional has decreased, and they can buy back short futures. So that's a put Vanna rally. That can help to fuel a rally. All right, so that's the Vanna model. Definitely in play. Vanna, implied volatility, and market makers trading with price, helping to fuel the move for SPX, S&P 500, and NASDAQ up and down. All right, let's move on to execution now. So my thesis for the day, first of all, looking for high volatility. And then for direction, really watching the 5,500 put wall. Spotgamma was expecting that level to be very solid support. So watch how price trades around that level, and then also watch what options traders have been doing. All right, so now I'm going to move on to execution. And I'm going to take a look at some setups. Going to start with the S&P 500. And as always, I'm going to start by taking a look at what options traders are doing. So this is the hero signal, hedging impact real-time options. So we're moving from static data, that positional analysis, to real-time data now, execution. Again, looking at what options traders have been doing, starting with the S&P 500. This is the hero chart. This is available to Spotgamma subscribers. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. So this is the index signal for the S&P 500. There are two lines on this chart. The first, the white line, is price for SPX, and the second line, the purple line, is the hero signal. The hero signal is showing options trades and market maker hedging activity for those combined index instruments that I just mentioned. And a rising hero signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. And a falling hero signal indicates traders are taking negative delta positions. They are buying puts and or selling calls. All right, there are two signals that we can take a look at for the S&P 500. This is the index signal, and the next is the equity signal. What this chart is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. Typically, this signal is smoother than the S&P index signal, but the S&P 500 index signal, I think, can often, since it is noisier, often provide a leading, more of a leading indicator than the equity signal. So let's take a look at let's start with the equity signal, and I'm going to shift to puts and calls. I'm going to have to jump back. All right, let me go back to the S&P 500, and before I go to full screen, or actually let's go on to full screen. So the orange line is showing calls, the blue line is puts. And a rising orange line indicates traders are buying calls. Market makers sell the calls. In this case, they have to buy futures to hedge their delta exposure. Rising blue line indicates traders are selling puts. Market makers are buying puts. And again, they have to buy futures to hedge their delta exposure. Note this pattern here. This sharp reversal, especially in the call line, is a pattern that Spotgamma has identified, a very good reversal pattern. All right, so starting with the index signal here, we can see a bit of a chop in the hero signal. And then around 10:15 or so, a little bit after 10, traders start selling puts, buying calls. Price moves up till about 11:10, 11:05, 11:10, something like that, then reverses lower. Let's go on to the equity signal. A little bit more clear. Move up from the cash open. Traders buying calls, selling puts. In the equities, S&P 500 equities, there's that sharp drop after the JOLTS number. Traders resume buying calls, selling puts. Price moves higher. Remember that in the equities, the index signal, the call line moved lower. In this case, all it took was the call buyers in the S&P 500 stocks to take the foot off the gas, start buying puts, price move lower. All right, so we know that the pattern for both was bullish up until about 11 a.m. Then the equities call buyers took the foot off gas, started buying puts, price moved lower. Index signal from about a 10 to 11, a little bit more clear. Traders buying calls, selling puts. Sharp reversal just after 11 a.m. Price moves lower. All right, let's take a look at the S&P 500. Let's go to ES now. Let's zoom in on this just a bit. All right, from the open, S&P 500 moves up. There's the reaction to the 10 a.m. data. Pull back to the 550 absolute gamma strike. Price reversed higher. Found resistance at the 550 large gamma 2 level and reversed lower as traders started taking negative delta options positions. Call buyers in the equities took the foot off the gas, started buying puts, and in the index signal, both the call and put line moved lower. All right, so let's take a look at the clues in Bookmap now. First of all, the volume dots in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. So just at the cash open, aggressive buyers start to come in, move price up until 10 a.m., 10 a.m. data. Sellers on the way down. And then buyers start to come in, traders taking positive delta positions. Note also in the subchart, this light blue line, that's showing iceberg orders. Large traders buying with iceberg orders, buying that dip pretty aggressively. So that's showing S&P 500 ES contracts. Large traders, again, buying with iceberg orders. Price moves higher. Aggressive buyers start to come in. You can see the cumulative volume delta started to rise. That is the magenta line. And then also buy stop orders fuel that move higher up to the 55.50 level just after 11 a.m. Buyers are exhausted. Sellers come in again. Magenta volume dots. Price moves lower. Traders are taking negative delta options positions. All right, that's the S&P 500. Let's take a look at NASDAQ. Very similar pattern. Let's take a look at Hero first. See what options traders are doing. So for the NASDAQ, there are two signals that we can take a look at too. Pretty similar to the S&P 500. The index signal. What this chart is showing is options trades and market maker hedging activity for a combined signal of NDX and QQQ. So this is the index signal. And the other signal is this Mag 7 signal. This is equivalent to the S&P equity signal. This is really, the S&P equity signal is almost like the Mag 7 plus 493. And the Mag 7 signal, often very similar to the S&P equity signal again, which is often the Mag 7 plus 493. All right, so this is a signal that we'll take a look at for the NASDAQ today. So let's go back to full screen. So what this chart is showing is from the open, traders buying calls shown by the rising orange line. When traders buy calls, market makers sell calls, and they have to buy stock to hedge their delta exposure. So bullish from the open. Also selling puts, blue line, orange line moving the same direction. That's a very powerful directional indicator. And then just like the S&P equity signal, the call buyers take the foot off the gas just after 11, start buying puts, and price moves a little lower and consolidates. And Stephen, maybe if you're around, maybe if you could help out SysDoc. So says he's looking for the live stream on Discord. Oh, SysDoc, you got it. Great. All right. All right, let's go take a look at NASDAQ now. All right, so this is the NQ Futures and Bookmap. Traders buying calls, selling puts in the Mag 7 stocks. You can also see rising cumulative volume delta, all the green volume dots. Green Green volume dots, rising cumulative volume delta. Also, a little bit different from the S&P 500. Note the gradually rising light blue line showing that large traders slowly accumulating with iceberg orders they use to hide their size. So up until about 11 a.m., traders were, and actually continuing after that, buying with iceberg orders. Also, note the rising yellow line showing that buy stop orders helping to fuel that move higher. So after the JOLTS data, price dropped sharply, chest the 458 level, and then traders resume buying calls and selling puts. Price moves up to the 464 level. Buyers are exhausted. Call buyers take the foot off the gas, start buying puts, and price now is consolidating. All right, so nice move higher in the morning, up to from the 458 to the 464 level. All right, any questions, comments about the S&P 500 or NASDAQ? If not, I'll move on to stocks. All right, first stock I want to take a look at is Apple. All right, the key for today for Apple was this 217.50 hedge wall. Folks, these levels work. 217 hedge wall. And let's go take a look at Hero for Apple. See what options traders are doing. So let's go to Apple. There's the 217.50 hedge wall. So from the open, traders were selling calls. Oops, sorry. From the open, traders selling calls, and then after a few minutes started buying puts. And then at the 217.50 hedge wall, traders start selling puts, buying calls, price moves higher, and continues to grind higher as traders continue to buy calls and sell puts. Not a lot of range today in Apple, but that 217.50 level, that was a target for the initial move down as well as the reversal level, support level for a long. Let's go back to Bookmap again. 217.50 level, held a support, now price grinding higher. Next stock I want to take a look at is AMD. All right, for AMD, 140 is the key gamma strike. Let's see what options traders are doing today. Go to AMD. All right, call buyers definitely driving price for AMD. From the open, traders buying calls. Initially, they were buying puts as well. Call buyers definitely driving price. Right after the data, the JOLTS data, 10 a.m., call buyers take the foot off the gas. Call buyers continue to buy calls up until about 10:45, take the foot off the gas, then price consolidates. So call buyers driving price in AMD today. When traders buy calls, market makers sell the calls, they have to buy stock to hedge their delta exposure. Let's go back to AMD. Zoom in just a bit. I'm going to turn on another indicator here. This is the Market Pulse price change indicator. It'll take a few minutes, just a few seconds for this historical data to load. All right, so remember 140 key gamma strike. Good entry point for longs. So here this long, this second retest after the data of the 140 key gamma strike, confirmed by the extreme in this Market Pulse price change indicator. So it oscillates. The extremes, negative extremes marked by bright red, positive extremes by bright green. I did change those colors, and that helps to confirm, in this case, long entries for an uptrend. This is also the pullback to VWAP, with that light blue line as VWAP. You bump up the volume dots just a little bit. All right, so right after the data, that would have been a good entry point as well. Get that off the screen. All right, so that's AMD. Next stock I want to take a look at is NVIDIA. I'm sure everyone is aware that NVIDIA dropped very sharply yesterday. So let's take a look at what NVIDIA is doing today. Note 110 is the hedge wall, key gamma strike. Acting as resistance today. Absorption at that level. This is the heat map and Bookmap showing history of limit orders in the order book. These bright red and orange colors indicate a large number of orders, in this case above price. Those are limit sell orders. Down below price at 105, those are limit buy orders. And very typical for stock, they will stay in the order book until they're filled. Note all the green volume dots in NVIDIA. A lot of aggressive buyers are coming in today, taking advantage of the dip yesterday. Let's see what options traders are doing, then we'll get back to the Bookmap chart. So let's go to NVIDIA. Call buyers driving price, also put sellers to some extent. Rising orange line. Traders buying calls, selling puts. Market makers take the opposite side of those trades, and they have to buy stock to hedge their delta exposure. Note for the day, both these numbers are positive. So the net notional value, traders are buying calls and selling puts for the day. Very typical pattern here. As price reaches that 110 hedge wall key gamma strike, almost to the tick, call buyers take the foot off the gas, start selling calls, start buying puts. Price moves lower. Now both the orange line and blue line have pretty much flattened out and price is consolidating. But as we saw with the green volume dots, aggressive buyers are still in there. All right, let's zoom in on this initial move higher. I'm not sure what's going on here with the lack of volume dots. Must be some issue with data. All right, for NVIDIA, this market pulse price change indicator often works very well as a confirmation for entries either in an uptrend or downtrend. So here's the first deep pullback, confirmed by the market pulse price change indicator. Second pullback here, also confirmed by the market pulse price change indicator. And again, price target at 110 liquidity, hedge wall, key gamma strike. All right, let's move on. One more stock I want to take a look at, the stock of the day, Tesla. Very bullish day in Tesla. Note for Tesla, 212.50 is the hedge wall. Price sliced right through that. 215 is the call wall. So Tesla breached its call wall as well as the 212.50 hedge wall. Let's see what options traders have been doing today. Go to Tesla. So call buyers and also put sellers driving price higher in Tesla. Very clear signal here today. Traders buy calls, also selling puts. Market makers take the opposite side of those trades, and they have to buy stock to hedge their delta exposure. And the call buyers really didn't take their foot off the gas until just before 11:30. Same for put sellers. Started buying a few more calls just before 12:30. Now again, both signals are flat. Call buyers doing very well on Tesla today. Let's go take a look at Bookmap. You can also see all the green volume dots, rising cumulative volume delta, shown by the dark blue line here. All right, nice move higher in Tesla today. Does anyone have any stocks they want me to take a look at? Those are all the stocks that I had planned on taking a look at, but I'll be glad to take a look at anything you want. All right, let's take a look at let's go back to take a look at the indexes again. All right, S&P 500 continues to grind lower. Let's see what options traders doing in the S&P 500. Check the index signal first. So after that reversal, just after 11 a.m., hero signal generally continues to move lower and started again, let's say around 12:35, 12:40. So for the S&P 500 index signal, these peaks marking highs, good entry points for shorts. Let's go back. So this first again was right around 11:05. Next, 12:38. First entry point for short, 11:05. 12:38, 12:36, something like that. In this case, levels noted here. This is the Spotgamma, 55.39. That is the implied move high. and also the 0 gamma level just below that, and then also the ES 5550 level acting as resistance. That is the second peak in the hero signal, another great entry point for short. And in either case, one way to play this is just to buy, if you trade 0 DTE spreads, you could buy a put spread or sell a call spread at either of these points, or buy options, buy a put. All right, so that's the S&P 500, continues to grind lower. Let's check NASDAQ. NASDAQ a little bit stronger today. Go back and check Hero. So we'll go to the Mag 7. For Mag 7, both the Hero signals put and call pretty flat. Check the index signals, grinding lower. Peak in the call line, marking the high of the day. Equity signal. Index signal. So these high peaks in the index signal really doing a little bit better job of marking the highest for the day. So after this first hour, I think the index signal is providing a very clear signal for the S&P 500. All right, Hector asks, is it possible to measure VIX with Hero or something similar? I'm sorry, I don't understand that question. So maybe if you could clarify. I'm not sure I understand your question, Hector. Obu says, hello, Obu, welcome, glad you're here. Thanks for your time. You're welcome very much. I'm glad you're here. Glad you're watching. Any other questions? Any of those stocks? I just want to take a look at something. This is an example of a vertical. Buying a put vertical pretty close to at the money. Actually, it was a little bit out of the money. Just a 5-point wide put vertical at one of those call peaks. I think the first call peak. So an example of one of the ways to play those peak reversals, bearish reversals. With options. All right, let's go back to Bookmap. NASDAQ continues to consolidate right around 462. S&P 500, again a little bit weaker now below VWAP. Oh boy asks, is there any way to predict closing price? Yeah, there is. I think it may be easier. It's definitely easier in a positive gamma environment. Remember, in a positive gamma environment, market makers are trading against price. So if you have a large level like the 5,500 level, large gamma weighted open interest, in a positive gamma environment, as price moves below that level, market makers will be buying. Above that level, market makers selling, and that can tend to pin price at a certain level. But that is much more reliable in a positive gamma environment where we know market makers are trading against price up and down. So yeah, in a positive gamma environment. Oh boy. All right, I'm going to wrap it up. Hector, again, I'm not sure if you can predict what's going on with the VIX. So I'm not quite sure what you're trying to get at there. All right, everyone. Thank you very much for watching. Have a great afternoon. Remember, data coming up this week, tomorrow. PMI data, primarily the ISM services PMI at 10 a.m. and then the jobs report on Friday, 8:30 a.m. Eastern time. And then we'll talk about it on Friday afternoon. All right, everyone, thanks again. Have a great afternoon, and I will see you on Friday. Bye.